Hello guys, welcome back to the Indian Value Investor. I am Suraj Subramanian, your investment guru. Welcome to the fourth part of the video series, Stock Market Terms Made Easy. In the last video, we learned about VWAP, 52-week high and low, and also L by U price band. In this video, we are about to see the subsequent terminologies. Please note that this is the beginning of fundamental analysis and thereby value investing. So without wasting much time, let's quickly get started. On the screen, you can see the statistics of the company ITC Limited. Every number on the screen gives very vital information to traders and investors. So watch this video fully to understand all these terminologies properly. Now, just below this word statistics, you can see two words, standalone and consolidated. The word standalone is given in orange, whereas the word consolidated is given in blue color. Standalone numbers show the financial position of the company ITC Limited alone, whereas the consolidated numbers tells us the financial position of the company along with its subsidiary companies, associates and joint ventures. Subsidiary companies are companies wherein this parent company has invested and has a controlling position. Here I am sharing a list of subsidiary companies where ITC has invested and has a controlling position. So when you are investing in shares, you are also indirectly investing in these subsidiary companies. So it is needless to say that the consolidated numbers are of paramount importance to investors. If you look at the right side of the screen that is shared with you, you can see that the numbers in blue are the consolidated figures and the numbers that are in orange are for the standalone figures. So let's quickly get into the terminologies. The first term that we have up here for discussion is market cap. Market cap is nothing but market capitalization. You can see that next to market cap, CR is given in brackets. This means that the figures that are given is in crores. Now what is market capitalization? Market capitalization is nothing but the total number of outstanding shares multiplied by the current market price of those shares. For example, let's say that company A has 1000 outstanding shares at rupees 100. For calculation of market capitalization of company A, we multiply this 1000 shares multiplied by the price per share of 100 to get 1 lakh rupees as market capitalization for company A. So this number, market capitalization, basically tells you how big or small the company really is. You can see that ITC has a market capitalization of rupees 2,38,000 crores. Many of you would have heard of large cap, mid cap and small cap stocks. What are these? So companies that have a market capitalization of less than 5,000 crores are known as small cap stocks. Likewise, companies that have a market capitalization between 5,000 and 20,000 crores are known as mid-cap stocks. Companies that have greater than 20,000 crores as market cap is known as large cap stocks. The next term that we have up here for discussion is EPS or earning per share. The TTM that is given in the bracket stands for trailing 12 months. Let me explain this with an example. Let's say company A has 100 outstanding shares and it makes 1000 rupees profit in the last 12 months. So earning per share for company A would be 10 rupees, which is nothing but 1000 rupees, which is the profit divided by 100 shares. Here for our stock ITC, you can see the earning per share for the trailing 12 months is 12.31 rupees for standalone and 12.45 rupees for consolidated. Please note that these profit figures are for the 12 months that immediately precedes today's date, which is 17th of July 2020. Also, please note that these need not necessarily coincide with company's financial year or calendar year. Before we can get to our next term, dividend, it is important that we understand what is face value. Let's try to understand face value with an example. Let's say Mr. X starts a company ABC and divides it into 1 lakh equal shares. Let's say he keeps the face value of each such share at rupees 10. Don't worry, let's just assume that he keeps rupees 10. The face value is generally more of a regulatory requirement in nature, which means that it is set just for the legal and accounting purposes. Many beginners and first-time investors tend to confuse between face value and market value. From our example, we can see that the face value of shares of company ABC is rupees 10. Let's say if these shares are present as physical certificates like in the old times before digitalization, the face value of these shares on these shares would have been 10 rupees. Now let's say Mr. X decides to sell 10,000 shares out of his 1 lakh shares in the market for an issue price of rupees 100. Then it is said that the shares are at a premium of rupees 90, which is nothing but the issue price of 100 minus the face value of rupees 10 per share. It is also interesting to note that the face value of the share generally doesn't have a relationship with the market price of the share. Like in the case of our stock ITC, where the current market price is somewhere around 194 rupees 5 paise and the face value of the stock is just 1 rupee. The market price can, however, go above or below the face value. Dividends and stock splits are declared upon the face value, which we'll be learning in the subsequent sessions. So that's all for part 4 of this video series, Stock Market Terms Made Easy. See you shortly with part 5. Thank you.